So the question for this presentation is, do branch offices of foreign company which are registered in Singapore qualify for tax exemptions? What are the qualifying conditions of tax exemptions for Singapore entities, especially when referring to branch and subsidiaries? And can branch office claim double taxation avoidance benefits if Singapore has a treaty with a specific country? So let's have a look on this. And the first thing to note here that we are referring to the branch, which is a special type of entity in Singapore. It is an extension of the foreign entity in Singapore. Foreign companies are registering their operations in Singapore. They have three options. First is a completely new subsidiary company. Second one is branch office, which is a registration of foreign company in Singapore, and it is not a separate legal entity. And the last one is a representative office. Now coming to this question, Singapore offers new startup tax exemptions. So all the companies which are new startups and some existing companies also, there are tax exemptions available. However, these tax exemptions are available to startups. And startup means normally small companies started by common people or the first startups, those are there. If a large successful corporate come to Singapore and start their operations, they will not get these benefits. And the second point to note is these tax exemptions are available to resident entities only, whereas branch is considered as a non-resident entity. So let's have a look on IRS website about what these exemptions are and what are the specific points related to it. So here I am on Inland Revenue Authority website, and it is talking about tax exemption scheme for new startup companies. So there are two types of exemptions available. The first one is for the companies which are recently registered. 75% of the first $100,000 income is exempted, meaning the tax will be charged only on the $25,000 for first $100,000 income, and a further 50% exemption on the next $100,000 of normal chargeable income. This is the exemption for newly started companies. And if I scroll down, the qualifying conditions for startup companies are given here. So it says that company must be incorporated in Singapore. The company must be a tax resident in Singapore for that year of assessment. And the company's total share capital is beneficially held directly by no more than 20 shareholders throughout the basis period, where all the shareholders are individuals or at least one shareholder is an individual holding at least 10% of the issued ordinary share capital. So now what happens is, first of all, branch is not considered to be resident in Singapore. So obviously branch will not get the tax exemptions, any of these tax exemptions. Second point you need to note here, even if you were to register a subsidiary, so if foreign entity registers a subsidiary where foreign entity is holding 100% of the shareholding, again they will not be able to claim new startup exemption because of this requirement that at least one shareholder should be an individual holding 10% shareholding. Now let's go back to the presentation, and moving to the next slide now. The question comes about Singapore DTA benefits. So DTA stands for Double Taxation Avoidance Agreement. So what happens? Let's say that if a company in Australia registers its business in Singapore, either by way of branch or by way of subsidiary, and if this company is taxed in Singapore, the income that is declared after that tax and that is repatriated back to Australia may get doubly taxed in Australia. So to avoid this, Singapore has DTA treaties with many countries where this double taxation can be avoided. And the question here then is, can the double taxation avoidance agreement benefits are available for branches also? So again, the double taxation avoidance agreement will depend upon the typical wording of that specific DTA, but it is available normally to resident companies only. Since branch is not a resident company, again the branch will not be able to take benefit of DTAs. So I think this should make it clear that possibly subsidiary can be a better option for majority of the foreign entities intending to register their business in Singapore.
Thank you for watching this video. This video was brought to you by Epica Consulting Singapore. Subscribe to our channel today to get notified when new videos are posted.